Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry and today is Thursday, February 23rd and the time is 2:30 a.m. GMT. Today we are looking at the chart of gold, 45 minutes chart here. Now this is a short-term chart, but I think what is more important to understand is not the short-term chart, because the short-term chart is quite choppy and it can probably change in a couple of different ways. However, I think it's more important for us to understand the medium term and the long term here. Okay, so we're gonna take a look at the short term first, explain what the primary view is, but then I think the more important thing is the medium and the long term. Okay. Alright, so here is the short term here. Now we can see based on this chart, we ended with B. So that means we are now within the wave C down. And with C intermediate degree should subdivide into 5 waves, as you know. And we have ended 1 here. Right? 1, 2, 3, 4, 5. Ended 1 in the minor degree. And the wave 2 ended here as an expanded flat. Okay, now we might have already started with 3 to the downside, but for this view to be valid, right, we still have to break below this previous low. Now, until then, couple of many different things can happen. Right, one possible thing that can happen, for example, with 1 could have ended here, and this could have been A, and this could have been B, and then we could have gotten a select up, right? And then that will be ending wave 2 and then going lower, right? So if you want to know why we do not call it this way, it's because some US dollar pair seems to have already extended in favor of the US dollars, and since gold is also priced in the US dollars, so in a way it's a proxy of the US dollars, that's why we are calling it this way, calling it expanded flat and then going lower, already extending to the downside. But for gold, again, to be valid, we still technically needs to break below the previous low here. That will confirm this view that it is indeed extending to the downside. Okay, so as you can see right off the bat, we have an alternate point of view where we can rally. So short term is really many different possibilities, to be honest. We can go like to some people, going to 1855 is such a big deal because they trade in such a short term. But I think for the more swing trader, I think that's kind of move 1855, and so it shouldn't matter that much for the swing trader because their position size is not so leveraged. So that's why, you know, a move up down by 20-30 dollars in gold shouldn't be that big of a deal if you manage your position size pretty well. Now again, I think what is important though is really in the medium and the long term. So let's take a look here. I'm zooming out here in the daily here. Okay, now actually I'm zooming out to the weekly first. Now you notice here a couple of things. One thing that we can conclude from the weekly point of a weekly trade is that we made an all-time high here in gold, right? Since this all-time high, all we got is a 3 waves. 1, 2, 3, and that 3 waves is ending exactly at the 100%. So for those who are bearish, then no, the chart is saying it is not bearish because it is only a 3 waves. 3 waves is corrective structure, so we have only 3 waves, and that 3 waves ended without any extension whatsoever, no 1.618, so this is at the 100% extension. So this is bullish chart. Right, this is a bullish chart, and eventually because of that 3 waves, most likely we're gonna break to new all-time high again at some point. Right now, of course, that will be taking time because it's a weekly chart. It can take months and years and so on, but it is bullish regardless when we're talking about the right side of the market. Okay, that's number one. Number two, you can see after we bottom here in October last year, the rally looks impulsive. Right, the rally looks impulsive, so that could be in the first leg of a new bullish cycle, and now we are doing this pullback here, right, which is what we are talking about here in the 1 hour, this pullback. But you notice here, if we look at the daily, we got a corrective structure which is only 3 swing, we got an impulsive move, so there's a chance that most likely we might have already started the next leg up, and that will eventually break to new high. Now of course we always have a chance to do what we call a double correction. which is basically a 7 swing 1 2 3 WX and then another 1 2 3. Now, but I think overall though, of course this possibility is still there, but then the rally here looks impulsive. So that's why I think the more likely chance at this point is that the pullback most likely is going to hold above this October low and continue to extend higher again. Either we do a big ABC to retest this 1000 to retest 2000 again, or this is your wave 1, this is your wave 2, and then we just break higher to new high, right? So one or the other way, but most likely because of the impulsive move here, we could hold above this October low during this pullback. Now if that's basically in the medium term pullback to be, pullback to hold above October, then I think, if you insist on, okay, the short term can see a little bit more downside and you are trading with heavy leverage on that, then you're missing the whole point, right? Because the medium long term is actually bullish against the October 2022 low, and the pullback always can, can end earlier, can truncate, and so on, right? So that's something we need to understand, number one. Now number two, let's go to the daily time frame here. Now let's see the pullback here. Now so far, let's use a simple retracement analysis. Now we are at that 40% more or less retracement from the lows. Now that's, it's a decent retracement, but it could extend. Of course, retracement can extend to 50 or even 60%. It's not totally impossible. So yeah, I would say in the shorter cycle we cannot say for sure the retracement is done, because there is not enough separation from the low, right? A lot of people want to know the exact low, but look, we don't have any separation from the low yet. So it's for us to be able to say, oh, this is the low for sure. That's impossible, because not enough separation from the low to conclude. So let's go to the 4-hour time frame, and now let's see this exact pullback. So now we get a better view of the structure of the pullback. Now going to the 1-hour chart again. So this 1890, we are labeling this as a wave B. So let's place that 1890 in the 4-hour time frame here. Okay, so the 1890 is right here, right? This is your 1890, and then we end it with one here. Let me place it so with one here, and then with 2 is placed here. So now we are going lower in a 3, 4, 5. Now remember, B, that means A is here. That means we are in the C leg, and that means this pullback is corrective because it is labeled as an ABC, right? So we can see a little bit more downside 3, 4, 5 before we finish the entire correction, right? Again, there is not enough separation from the low to conclude we already bottom, and it's only 40% retracement. So definitely there is scope for more downside in the shorter cycle, but keep in mind the medium term and the long term, basically most likely any pullback is going to hold above that October low and then resume on the upside. So if you understand the medium, the long term view, you need to be careful with the short term, because the short term can always change. It can always end earlier, it can always truncate, and it can always reverse earlier than we expect. But for now, no sign that it has already ended. So we are looking for the downside, and as a possible alternate, there are many different ways. We can do this and go down again. That's possibility number one as an alternate. Now let's discuss a couple of other alternates. There are at least 2 more alternates in the shorter cycle. One being that this cycle ended right here. So in other words, if you project using extension here, C leg at 100% is more or less at the 50% correction, which is 1790, which is perfect. There's a lot of confluence of the 1790, so it can go down there to 1790, right? To reach the 100% equality. But another option will be that this cycle actually ended without reaching the 100%. So in other words, this one is not one of C, this one is your entire C. Now if that's your entire C, then that means we could either go to new high right away, because that's already ending the zigzag without the C equal to the A, or this ABC 3 waves, it could be ending a W, and then you can have a bigger rally like an X, and then going down again, right? Now the thing is, a lot of people want to know exact path in the shorter cycle, but honestly, in the shorter cycle has a couple of different paths. It's just like to get into number 10, right? In mathematics, to get into number 10, there are many paths to go there. You can have number 10 through 1 plus 9, through 2 plus 8, 3 plus 7. Eventually, the end result is the same, number 10. But in order to get there, you can have many different ways. So in the same way we can say in gold, there are many ways to go higher. Eventually, there are many ways to break above here. One possible way is what we are presenting here. We extend lower immediately within the C leg. So in other words, we are still within the C leg like this, and we go lower. That's basically one way to do it. Another way is like I explained before, we go higher first and then go lower again. Number 3 is we're ending W here, and then this is X, and then another leg down Y before we finally go higher. So the number 10 in gold is eventually breaking higher. So in order to break higher, we can go down directly before going higher. We can rally first and going down and going higher. We can have a W here, rally a little bit higher and go down again and higher. So eventually though, it's going to break above here, right? So that's something that we need to understand when we are trading, is the multiple different paths, and the end result is what is important here. Okay, so for now, back to the primary view, we are looking for more downside against 1890 for now, and again, until we got credible move separation from the lows, then I think the path still remains to extend on the downside a little bit more before we finally find support and then starts to reverse again, because the move up from this October last year, this move up from October 2022 looks impulsive. All right, so for the updates on gold or any other commodities, Forex, ETF, stocks, you can check our service. We have for the index trial. The link is in the description of the video. So I'll see you all again next time. Have a nice day, everyone.